The Eurozone has gone into meltdown. Greece's economy has collapsed and it now looks set to leave the euro. Spain's banks are being downgraded by rating agencies. And the issues on the continent will be felt here in the UK. And one area that looks likely to be impacted is mortgage rates. Even though the bank base rate shows no sign of moving at the moment, the interest rates we pay on our mortgages look set to increase regardless. According to the Bank of England, we should all get ready for sharp increases in mortgage costs as a result of continental troubles. In its inflation report, the bank said,
"In the absence of falls in funding costs, it suggests that some further increase in mortgage rates is likely as banks seek to restore their margins."
We've already seen in the Eurozone is as a result of the uncertainty there, banks are more reluctant to lend to each other. That's going to make it harder and probably more expensive to obtain wholesale funding for UK lenders. One of the ways in which they may seek to counter that is to raise more money through retail deposits, but increased competition for retail deposits may push up prices there too. So the combination of these two things is likely to result in higher mortgage costs over a period of time, probably over the coming weeks and months.
In fact, the signs are there that the Eurozone uncertainty is already increasing the cost of buying a home. Mortgage rates across the board have increased since the turn of the year, with the bulk of the increases in the last couple of months. For example, the average 2-year fixed rate cost 4.36% in February. Today, it's up at 4.66%. The average 3-year fixed rate has jumped from 4.63% to 4.86% over the same period, while there's been a near identical rise in the average 5-year fixed rate. It's not just fixed rates either. 2-year trackers have jumped from 3.54% in February to 3.71% today, and lifetime trackers have risen from 3.58% to 3.8%. So what should borrowers do now?
So lenders' offer rates are on the increase at the moment, although depending on who you listen to, the Bank of England base rate probably won't increase until maybe midway through 2014 to almost as late as midway 2015. So a short-term tracker rate might still be a good option for people who are willing to take a little bit of a gamble. The trouble is, at the end of that 2-year tracker, you might find that rates may well have increased on the lender's offer rate. So you might find that a 5-year fixed rate then will cost you a lot more than what a 5-year fixed rate would have cost you now.
It seems pretty clear that mortgage rates are only going to get more expensive. Sitting on your hands may hit you hard in the wallet.